What I'm about to reveal will change everything you thought you knew about aircraft ownership, market timing, and the financial opportunities that are about to unfold in the next 12 months. While most pilots and aircraft owners are completely unaware of what's happening right now, a small group of insiders has been quietly positioning themselves for what could be the most dramatic shift in aircraft values we've seen in over 2 decades. The numbers I'm going to share with you today are not speculation. They're documented, verifiable, and they point to something massive that's already in motion. By the time the average aircraft owner realizes what's happened, it will be too late to take advantage of the opportunity, and potentially too late to protect themselves from what's coming. Whether you own an aircraft, you're thinking about buying one, or you're considering selling, the information in this video could literally be worth hundreds of thousands of dollars to you. But here's what you need to understand right from the start. This isn't just about prices going up or down. This is about a fundamental restructuring of the entire general aviation marketplace, driven by forces that most people in this industry don't even know exist. Stay with me, because I'm going to walk you through exactly what's happening, why it's happening, who's going to win, who's going to lose, and most importantly, what you need to do right now to position yourself on the right side of this transformation. Let me start by addressing the elephant in the room, the 40% figure in the title of this video. Is it accurate? And the answer is yes and no, and that distinction is critical to understanding what's really happening. Certain segments of the aircraft market have seen asking price declines approaching 40% from their peak values over the past 18 to 24 months. But this hasn't happened uniformly across all aircraft types, all age categories, or all geographic markets. The decline has been concentrated in specific segments, and understanding which segments and why is absolutely essential to making intelligent decisions right now. What we're witnessing is not a simple market correction. It's a bifurcation, a splitting of the market into distinct tiers that are behaving completely differently from each other. And if you don't understand which tier your aircraft falls into, or which tier you should be targeting if you're a buyer, you're going to make very expensive mistakes. Here's what the data actually shows, and I want to be precise about this because the details matter enormously. In the used business jet market, particularly for aircraft that are 15 to 25 years old, asking values have declined significantly from their pandemic peaks. We're talking about aircraft like older Cessna Citations, early Learjets, King Airs from the 2000s, and similar turbine equipment. These aircraft saw dramatic price appreciation during the pandemic when demand surged and supply was constrained. Values that had been relatively stable for years suddenly jumped 30, 40, sometimes 50% between late 2020 and early 2023. But what goes up under those conditions almost always comes back down, and that's exactly what we've been seeing throughout 2024 and into 2025. According to data from multiple aircraft valuation services and marketplaces, inventory levels for used jets have increased while asking prices have declined steadily. The market is returning to something closer to historical norms, but the transition is creating both risks and opportunities that most people are completely missing. Now here's where it gets interesting, and this is the part that separates people who understand markets from people who just react to headlines. The decline in older turbine aircraft values is happening for very specific reasons, and those reasons tell us exactly what's going to happen next. First, the pandemic buying frenzy was driven largely by several temporary factors. People wanted private travel to avoid commercial aviation during COVID. Interest rates were at historic lows, making financing incredibly cheap. Tax incentives for aircraft purchases were at their most generous due to accelerated depreciation provisions. and supply chains were disrupted, reducing the availability of new aircraft and pushing buyers toward the used market. All of these factors created artificial demand that pushed prices to unsustainable levels. Second, as we've moved through 2024 and into 2025, every single one of those factors has reversed. Commercial aviation has fully recovered. Interest rates have increased dramatically, making financing expensive. Tax incentives have begun to phase down, and aircraft manufacturers have largely resolved their production bottlenecks, increasing the supply of new aircraft. The result is predictable. Demand for older used aircraft has softened, inventory has accumulated, and prices have declined. This is basic supply and demand economics, and anyone who understands market cycles should have seen this coming. But here's what almost nobody is talking about, and this is where the real money is going to be made or lost over the next 2 years. The decline in certain segments of the aircraft market is creating a massive opportunity for informed buyers, but only if you understand what to look for and how to time your entry. At the same time, it's creating serious risk for certain types of sellers, particularly those who bought at the peak and are now facing depreciation that's far steeper than they anticipated. The key is understanding that not all aircraft are created equal in this environment. There are winners and losers within every market category, and the differences between them are becoming more pronounced, not less. Let me break this down in a way that will actually help you make decisions. First, let's talk about the age and condition spectrum. Aircraft that are extremely well maintained, have comprehensive logbooks, recent upgrades to avionics and interiors, and low total time are holding their value far better than average examples. The spread between a pristine aircraft and an average aircraft in the same model year has widened dramatically. During the pandemic boom, everything was selling regardless of condition because demand was so strong. Buyers were less discriminating because they felt they had to act fast or they'd miss out entirely. That behavior has completely reversed. Today's buyers are taking their time, conducting thorough pre-purchase inspections, and they're only willing to pay premium prices for premium aircraft. If your aircraft is average or below average in condition, you're going to face significant headwinds in this market. Conversely, if you're a buyer looking for value, targeting aircraft that need some work but have solid bones can be an exceptional opportunity right now. Many sellers who are motivated will discount heavily to move aircraft that have deferred maintenance or cosmetic issues, and if you have the ability to address those items, you can create instant equity. Second, the technology gap is becoming critical in ways it wasn't before. Aircraft with modern avionics, ADS-B compliance, and current maintenance are commanding premiums over those with outdated panels and upcoming inspection requirements. The reason is simple. Buyers are calculating total cost of ownership, not just purchase price. If they're looking at an aircraft that's going to require $50,000 in panel upgrades and another $30,000 in upcoming inspections, they're going to discount the purchase price by more than those amounts because they also have to factor in the time, hassle, and downtime. On the other hand, an aircraft that's fully updated and current on all maintenance represents a turnkey opportunity that buyers will pay extra for. This creates interesting dynamics for both buyers and sellers. If you're a seller with an outdated aircraft, you may actually be better off investing in upgrades before listing rather than trying to sell as is and taking a massive discount. If you're a buyer, you need to run detailed TCO calculations and not just focus on the asking price. Third, and this is huge, the market is bifurcating by mission profile in ways that are creating dramatically different value trajectories. Aircraft that serve niche missions or have unique capabilities are holding value much better than commodity aircraft. A turboprop that can operate from short runways in remote locations is going to fare better than a generic light jet that competes with hundreds of similar aircraft. A twin-engine piston with known reliability and strong manufacturer support is going to do better than an orphaned design with parts availability issues. An aircraft with a proven track record in a specific operational environment, whether that's mountain flying, coastal operations, or international travel, will command a premium over a more generic alternative. This means that as a buyer or seller, you need to think carefully about the specific mission and market for your aircraft, not just the broad category it falls into. Now let's talk about what's coming next, because this is where you can really position yourself advantageously if you understand the trends. The aircraft market over the next 12 to 24 months is going to be shaped by several major forces, and understanding these forces will help you time your decisions correctly. Force number one is interest rates and financing availability. As of late 2024 and early 2025, we're seeing the beginning of what appears to be a rate-cutting cycle by central banks. If rates come down materially over the next year, financing costs will decrease, making aircraft ownership more affordable and potentially reigniting demand. However, this is not guaranteed, and the pace of cuts will matter enormously. Force number two is the economic environment and business confidence. General aviation, particularly in the turbine market, is heavily driven by corporate profitability and high net worth individual wealth. Economic uncertainty, geopolitical tensions, and business cycle concerns all impact demand. Right now, we're in a relatively uncertain environment, and that's keeping some buyers on the sidelines. Force number three is tax policy. Changes to depreciation rules, potential adjustments to business deduction regulations, and other tax considerations could significantly impact demand, particularly for business aircraft. Anyone making purchase decisions right now needs to be modeling different tax scenarios. Force number four is technological change and the emergence of new aircraft types. Electric and hybrid propulsion, advanced air mobility, and other innovations are beginning to impact buyer psychology, particularly for those looking at aircraft that will be in service for many years. There's a risk of technological obsolescence that didn't exist a decade ago, and that's causing some buyers to hesitate or to favor newer aircraft with longer useful lives. Force number five, and this one is often overlooked, is insurance market dynamics. The aviation insurance market has seen significant volatility in recent years, with capacity constraints, rate increases, and changing underwriting standards. However, recent reports indicate that the market is softening with more capacity available and rates declining in some segments. This is actually a positive development for aircraft owners and could support values by reducing operating costs. But it's worth monitoring because insurance market conditions can change quickly. So where does all this leave us? What's the actual playbook for buyers and sellers in this environment? Let me give you specific, actionable guidance based on what we know right now. If you're a seller and you need to sell within the next 6 to 12 months, you need to be realistic about pricing and aggressive about positioning your aircraft. The days of listing at an aspirational price and waiting for a buyer to come along are over, at least for most aircraft types. You need to price at or slightly below current market comps. Make sure your aircraft is showing well, have all documentation organized, and be prepared to move quickly when you find a qualified buyer. Waiting and hoping for the market to recover is a gamble that may not pay off, and meanwhile you're incurring carrying costs and potentially missing the window. If you're a seller, but you have flexibility on timing, the calculus is different. You may want to wait and see how the next 6 to 9 months develop. If rates come down, tax policy remains favorable, and economic conditions stabilize, we could see demand strengthen and values stabilize or even recover somewhat in certain segments. But you need to have a clear exit strategy and be monitoring the market closely. Don't just put your head in the sand and hope for the best. If you're a buyer and you've been waiting for better prices, right now is potentially an excellent time to be looking seriously. Inventory is elevated, sellers are motivated, and there are genuine opportunities to acquire quality aircraft at prices that are substantially below where they were 18 to 24 months ago. However, You need to be selective. Don't buy an aircraft just because it seems cheap. Make sure it truly fits your mission, that the total cost of ownership makes sense, that you're comfortable with the technology and systems, and that you have a clear plan for ongoing maintenance and operations. And here's a critical point. In a down market, the temptation is to bottom fish and look for the absolute cheapest option. Resist that temptation. The cheapest aircraft is almost always cheap for a reason, and those reasons tend to be expensive to fix. Instead, look for value, which is different from cheap. Value means you're getting a quality aircraft at a fair price relative to its condition and capabilities. That's where the real opportunities are. Now let me address something that's probably on your mind. Is the aircraft market going to crash further? Are we at the bottom, or is there more pain ahead? The honest answer is that nobody knows with certainty, and anyone who tells you they do is either lying or delusional. Markets are complex systems influenced by countless variables, many of which are unpredictable. However, we can make some educated assessments based on current conditions and historical patterns. In the segments that have already declined significantly, particularly older turbine aircraft, we're likely near or at the bottom in terms of pricing. The adjustments have been substantial, and we're seeing signs of stabilization in some categories. Transaction volumes are picking up, days on market are beginning to stabilize, and the rate of price declines has slowed. This doesn't mean prices are going to surge back to pandemic levels. That's unlikely. But it does suggest that the worst of the correction may be behind us in those segments. In other segments, particularly newer aircraft and certain piston categories, the picture is more mixed. Some aircraft types have held value well throughout this period and may continue to do so. Others are just beginning to see softness as inventory builds and buyer psychology shifts. The wild card in all of this is the broader economic picture. If we enter a recession, if geopolitical tensions escalate significantly, if there's a major financial crisis, all bets are off, and aircraft values could face renewed pressure. Conversely, if economic conditions strengthen, if business confidence improves, if tax policies remain favorable to aircraft ownership, we could see demand recover faster than expected. This uncertainty is precisely why your decision-making needs to be based on your specific situation, your risk tolerance, and your time horizon, not on trying to time the absolute bottom of the market. For most people, it's better to buy an aircraft when you need it at a fair price than to try to perfectly time the market and potentially miss out on years of utility and enjoyment. Let me share something that experienced aircraft owners understand, but that many people miss. The best time to buy an aircraft is when you need it and can afford it at prevailing market prices, assuming those prices are reasonable relative to historical norms. The worst time to buy is when prices are irrationally high due to temporary mania, or when you're stretching financially and hoping for appreciation. Right now, for many aircraft types, prices are at or below long-term trend lines. That makes this a fundamentally rational time to buy if you have a genuine need. Similarly, the best time to sell is when you no longer need the aircraft, when the operating costs no longer make sense for your usage, or when you've found something that better fits your mission. The worst time to sell is when you're in a panic or when you're trying to time the absolute top of the market. If you're thinking about selling and the math works for you at current prices, it probably makes sense to move forward rather than gambling on future market movements. Here's another dimension that's critical and that most people completely ignore: the psychological and emotional aspects of aircraft ownership in a declining market. If you bought an aircraft at the peak and you're now sitting on paper losses, that can be emotionally difficult. Some people hold on far too long because they don't want to realize the loss, even when holding on means paying ongoing carrying costs that exceed the rate of depreciation they're trying to avoid. This is called loss aversion, and it's one of the most common and expensive psychological biases in investing and asset ownership. The rational approach is to evaluate your situation based on current conditions and forward-looking expectations, not based on what you paid in the past. Your purchase price is a sunk cost. It's gone. The only thing that matters now is whether continuing to own the aircraft makes sense based on current value, current carrying costs, current utility to you, and expected future trends. If the answer is no, then selling at a loss may actually be the right decision, even though it feels terrible. Conversely, if the answer is yes, then you should continue to own and operate the aircraft without worrying too much about short-term value fluctuations. Let's talk about some specific examples to make this concrete. Imagine you own a 2006 King Air 350. You bought it in early 2022 for $2.5 million. At the time, the market was hot, and that was fair market value. Today, similar aircraft are listing for around 1.8 to 2 million, depending on condition and time. You're sitting on a paper loss of 500,000 to 700,000. What should you do? First, you need to assess your actual usage and need. Are you flying the aircraft regularly? Does it still fit your mission? Can you afford the operating costs comfortably? If the answers are yes, then the paper loss is largely irrelevant. You're using the aircraft for its intended purpose, and eventually, as the market stabilizes, depreciation will slow. If you were to sell and buy something else, you'd likely face similar market dynamics in whatever you purchased. On the other hand, if you're barely using the aircraft, if operating costs are straining your finances, or if your mission has changed and you really need something different, then holding on because you don't want to take the loss is irrational. You're paying insurance, hangar, maintenance, and all the other costs just to avoid realizing a loss that's already happened economically. Now let's flip it. Imagine you're looking to buy that same King Air 350. The market has softened, there's good inventory available, and sellers are negotiable. This could be an excellent opportunity, but you need to do your homework. Get a thorough pre-purchase inspection. Review the logbooks in detail. Understand what maintenance is coming due. Calculate your total operating budget, including fixed and variable costs. Make sure financing is locked in if you need it, and have a realistic plan for how you'll use the aircraft. If all of that checks out, buying in a soft market can be one of the smartest financial decisions you make, because you're acquiring an asset at below replacement cost that will provide utility and value for years to come. The fact that the previous owner took a loss is irrelevant to you. What matters is whether the aircraft makes sense at the price you're paying. Here's something else that's absolutely critical and that almost nobody talks about. The importance of professional guidance in navigating aircraft transactions during volatile market conditions. Whether you're buying or selling, having experienced representation can make a massive difference in your outcome. A knowledgeable aircraft broker or acquisition consultant understands current market conditions, has access to real transaction data, not just asking prices, knows how to structure deals, can identify issues during due diligence, and can help you avoid costly mistakes. The cost of professional representation is typically a small percentage of the transaction value, and it almost always pays for itself many times over through better pricing, better terms, avoided problems, and reduced stress. In today's market, where conditions are shifting and values are uncertain, this is more true than ever. Don't try to navigate a major aircraft transaction alone unless you have deep expertise in the current market. It's just not worth the risk. Let me address one more thing before we wrap up, and this is important: the role of financing and how it's changing in this market environment. During the pandemic boom, aircraft financing was readily available and relatively cheap. Banks and specialty lenders were eager to make loans, rates were low, and terms were favorable. That's changed. Interest rates have increased substantially, making the cost of financing higher. Some lenders have tightened their underwriting standards, and the appraised values that banks are using for loan-to-value calculations have decreased along with market prices. This has several implications. First, if you're buying with financing, you need to get pre-approved and understand your actual borrowing capacity before you start shopping seriously. Don't assume you can finance what you could have financed 2 years ago. Second, if you're selling and your buyer needs financing, be prepared for the possibility that the appraised value comes in below your agreed price, requiring either a price reduction or the buyer to bring more cash to closing. This is happening more frequently as lenders adjust their valuations downward. Third, consider whether paying cash or using less leverage might make sense in this environment. If you can avoid financing costs and keep your fixed overhead lower, you'll have more flexibility and less financial stress. Obviously, not everyone can do this, but if you have the option, it's worth considering. The bottom line on where we are right now in the aircraft market is this. We've been through a significant correction in certain segments, particularly older turbine aircraft, after an unprecedented run-up during the pandemic. Values have declined substantially from peak levels, but we appear to be stabilizing and maybe near the bottom in the hardest hit categories. Other segments have held up better and may not see the same degree of correction. The next 12 to 24 months will be shaped by interest rates, economic conditions, tax policy, and broader aviation industry trends. For buyers, this is potentially an excellent opportunity if you're selective and do your homework. For sellers, this is a time to be realistic, strategic, and focused on your actual needs rather than trying to time the perfect exit. And for everyone, this is a reminder that aircraft ownership is about utility and mission fit, not speculation and investment returns. The people who do best in this market are those who make decisions based on sound analysis, who work with qualified professionals, and who maintain perspective about what really matters. If you understand these principles and apply them to your situation, you'll navigate this market successfully, regardless of what happens next. The opportunity is there for those who know how to see it and have the discipline to act on it intelligently. What we're witnessing right now is not the end of general aviation or some catastrophic collapse. It's a market returning to rational levels after an irrational period. And in that return to rationality, there are winners and losers. The winners are those who understand what's happening, who make informed decisions, and who focus on acquiring or retaining assets that genuinely serve their needs at prices that make economic sense. The losers are those who panic, who make emotional decisions, who try to time the market perfectly, or who ignore the fundamentals. Which group you're in is entirely up to you. The information is available. The professionals are there to help. The opportunities exist. The question is whether you're going to take advantage of them or let them pass by. My hope is that this video has given you the framework and the knowledge you need to make smart decisions in this environment. The aircraft market has always been cyclical. It always will be. But cycles create opportunities, and right now we're in the part of the cycle where informed, disciplined buyers can create enormous value. Don't let fear or uncertainty paralyze you. Do your research, run your numbers, get good advice, and make the decision that's right for your specific situation. That's how you win in any market.